Greetings everybody, Sive Morten here with the Forex Peace Army.com as usual. Let's take a look what's going on in the Forex market, in particular in euro currency. So in the last few sessions, before the Thanksgiving and actually on Friday as well, we said that performance that we see on the intraday charts doesn't look actually bearish. So that was the reason why we made the decision to not take any short positions by fire on the euro currency and see what will happen. Also, today I have reshaped a bit and changed the picture on a daily chart. So if you remember, previously we talked about possible free drive. Well, potentially it is not cancelled yet, but since we are discussing some bullish signs or bullish performance, or let's say not quite bearish performance on intraday charts, probably now it is not as important, this particular pattern, and far extended standing targets around 1350. It's more interesting what will happen right here. That's why I just keep the last butterfly here, just to not forget about it, that we have it. Besides, this butterfly is still, theoretically, it is valid, just because this top stands below this one, and that's why the shape of the butterfly still could be formed. And also, I put here this kind of the triangle consolidation. Normally, this type of action should be bearish because we have downside action, then we turn to the triangle, and in a normal situation we usually are getting downside breakout. And here is actually the major intrigue stance. So what will happen right on top? Why actually I'm not ready to say that the bearish context is totally vapor out? It's just because if you take a look on the 10-year bonds, for example, recall what we have here with this hand shoulders pattern. And recently, although we do not see yet any impact on the dollar index performance, recently we've got the jump of the yields here. And this jump was relatively not small. It's approximately for the 15 basis points. So this is relatively big jump. This is daily chart. And if pattern was to keep going further, start forming, hand shoulders starts working, it might be a more extended upward action, somewhere back to the 4.2, 4.75, and that's will be dollar supportive. From that standpoint of view, if this will be the scenario, euro currency easily could complete this pattern to the downside on the background of the rising United States yields. Since we do not have any vital breakout on the euro currency, none of the important levels have been broken. I mean, vital for the bearish setup. So bearish setup is not cancelled yet. That's why I'm not hurry up with totally denying it. At the same time, here we need to specify some control points that we have to keep an eye on to understand earlier what is going on. So on the 4-time frame chart, finally you can see that the market was able to climb back to the neckline, which is actually right now the border of our triangle on the daily chart. And that seems nice. But it also puts some limitation on the euro performance. If market tries to pretend on the bullish background and forming some bullish patterns, which is actually not quite bullish because we have really deep right arm, which is actually not normal. Usually the left arm should be deeper than the right arm. But anyway, market by some reason was able to reach the neckline. Currently, limitation stands so that it should not show any deep retracement. We could accept some minor pullback, but the market hits the neckline. We do not want to see drop right back down to the bottom of the shoulder and dropping through all support levels that we have on this upward swing. We could take only some minor retracement. And that led us to specify and create actually a relatively simple trading plan. So if you take a look at the hourly chart, we see accurate upside channel. This was our hand shoulders pattern that we discussed, if you remember. It looks really nice. In fact, we have kind of the V-shape, or you could even call it some kind of the compounding bullish engulfing pattern. It's actually hand shoulders, and market mostly has completed, because if you calculate the ABCD pattern here, you will see that minimum target with hand shoulders has been completed. Now it stands on retracement. And here, I would mention the 1590 area as probably one of the vital areas for a current situation. Just because downside breakout of this pattern will be not natural for bullish market. So market has confidence support, it stands around the neckline, it has completed the right arm of the hand and shoulders, stands in a tight channel here, and suddenly just imagine that market just break it down. So hardly it will be called as a bullish sign. So let's give market some room for performance, for fluctuation, and let's say that until market stands above this area, we could be patient and give market some credits to start forming something bullish. So it means that if you would like to take the long position, probably that will be the optimal point, not because it increases the chances on the success, but just it minimizes your potential risk. So in this case, if you enter somewhere in this area, you could place stop somewhere below the confidence, for example, very close. You do not need to take the big risk. If it will be okay, that's great. Market will just start moving higher inside of this channel. If the breakout will follow, the risk will be very small. So that's actually the scenario that we currently could consider, because despite the butterfly that we have on the daily chart here, trend stands bullish. And in fact, we do not have any sufficient background for taking short positions immediately. We need to get some confirmation. For instance, the breakout of this level might be at least some kind of this confirmation, so some signs of this confirmation. But currently we do not have it. That's why, as a bottom line, we are not taking currently any shorts. We are watching for an area around 1590 to make a decision on a possible long entry. That's our plan for just nearest few sessions, and see what will happen next.